All right, ladies and gentlemen, we need to talk about this, and this, and this, and you know what? This too. Class is in session. Steve Antonioni here, back with another episode of Cash College. Today we are talking about the state of the stock market and a warning I would like to give you based on a costly mistake that I made in the past. About 8 months ago, I posted a video talking about how the stock market appeared to be overvalued, at least according to some of the most popular measurements, like the Shiller PE ratio or the Buffett indicator. And since that time, since the beginning of the year, the stock market has gone up by 25%. Let that sink in for a second. I wonder, when was the last time the stock market has gone up this much in a single year? It turns out it's actually fairly common. Looking at the historical returns of the S&P 500, we can see that there are many years where the return is 25% or higher. But look what happens after those years. More often than not, the next year is a considerably lower return, sometimes even negative. Uh-oh. Does this mean we should expect a bad stock market return in 2022? Well, we have had 3 really strong years since 2019. So could this potentially mean that we're in for a slower year next year? To know for sure, we'll have to grab my crystal ball. Hold on one moment while I go grab it. Okay, so I was told to be careful using this. An old man in a gray cloak who gave this to me specifically said that these are not all accounted for and that we can't be sure who's watching. I don't know what that means, but let's get this bad boy going here. Any Lord of the Ring fans out there? Come on, hit that subscribe button. You'll be right at home here. Okay, so of course, I don't actually have a crystal ball and I can't predict the stock market in the short term. But I do feel a lot more confident which direction the stock market will go in the long term. That's why my investment portfolio looks like this. I'm invested in these things with a long-term mentality. Unfortunately, it's that short-term mentality which has led me to make mistakes in the past. And it turns out, I'm not the only one. Graham Stephan did the exact same thing. Recently, Graham posted a video about selling his Tesla stock back in 2020. At the time, Graham thought he was doing the right thing. He thought he was timing his sell perfectly, getting out at just the right moment. In the short term, he actually did. He sold at the peak right before Tesla stock dropped 50%. So where's the mistake? Sounded like a really good idea to sell, right? In fact, should I sell all my stocks right now and do the exact same thing? For me, the answer is no. Here's why. After Graham sold, yes, Tesla did drop. But then look what happened. Tesla rose another 635%. Oof, that sucks. But hey, it happens to the best of us. I mean, maybe that's something that's happened to you. And if it has, I would actually love to hear your stories down in the comments below. Personally, my big mistake was not holding on to Apple, Netflix, and EA shares. I invested in those companies in 2015 when I was a broke university student. So I wasn't investing a lot at the time, but it could have grown to be so much more. Altogether, my initial investment of around $2,400 would have turned into around $8,500. Oh, that sucks. So the mistake that both Graham and I made was basically thinking that we were smarter than the market itself. We thought we could safely use the Palantir without Sauron coming in with his big scary eye. In other words, we thought that we knew whether the stock market was overvalued or not. But it turns out no one does. No one can accurately and consistently predict the movements of the stock market. Okay, so I'm just editing the video you're watching here, and at one point while I was filming, I had to sneeze. Now, check this out. Now that's a powerful sneeze. I gotta know if anybody else has this thing where when they sneeze, it's like a yelling sneeze. It just projects out of you with such force that it like rocks your whole body. I gotta know if there's anybody else out there like me. Please let me know in the comments. That's why now, today, I make sure to buy and then hold my investments for the long term. Here's how I do that. First, I make sure that I don't need to sell my investments. I do this by keeping an emergency fund, and you can now see mine on the screen. Okay, so I know you're probably thinking, well, what kind of emergency are you preparing for? The end of the world? Why do you have that much money in an emergency fund? I can explain. Most of this is not the emergency fund. The reason why I have so much money in this account is because I have to figure out my tax situation this year, and it's also the money that I'm getting ready to invest in the stock market. All that cash kind of gets parked here, basically. I put all of this here because I didn't want it to just sit in a basic bank account. This is a high interest savings account. You can see I'm earning increasing amounts of interest every month. And just by parking this money here, I'll get over $1,000 this year, compared to a normal bank account where I'd be lucky to maybe even get $50. So it's a really big difference. If you live in Canada and you're looking for hands down the best place to park your cash, I use this. EQ Bank. It has a really great interest rate, and I'll leave a link for it down below in the description. So after I make sure that I won't be needing to sell my investments to pay for some big expense, I can confidently hold them and add to them for years into the future. Check this out. I want to look at something together. Let's look at some of the so-called bubbles that we've passed through. Tesla stock hit a high of around $880 a share back in January. Now, leading up to this, it rose about 130% in less than 3 months. At this time, everyone was just like yelling from the streets, "It's a bubble! It's a bubble!" And naturally following this, it actually dropped 32% in just 2 months. So if you bought Tesla at that time, you were probably feeling pretty bad about your decision. But now, well, would you look at that? Give it a little bit of time, and you're up 33% on the year. That's a great return. You see, in the short term, all kinds of wonky things can happen. But in the long term, that's where we really find out if you've made a good or a bad decision. Who wants to guess what the price of Tesla stock will be 2 years into the future? How about 5 years? 10 years? Do you think at that point you'd still be butthurt about buying Tesla for $880? I'm personally guessing probably not. Instead, you'll probably just be happy that you bought it in the first place. Honestly, I'm really happy that I made this mistake early on in my investing career because it taught me such an important lesson. Worst case, I could have lost out on that entire $2,000 initial investment. Like worst case if all those stocks went to zero. But I missed out on a $6.5 grand profit by not having the confidence to just hold those investments for a few short years. So in the end, what really costs you more? Nowadays, it's sometimes a little bit scarier to hold onto my investments, especially because I'm working with larger amounts than just $2,000. By the way, if you want to know how I built this portfolio, starting from just $0 over a period of 3 years, I created a course to help you do the same. Over 100 people have now taken it, and they've given it a 4.7 star rating. So I don't even have to tell you how good it is. I'll just let that speak for itself. No, but for real, I do take a lot of pride in my work, so it is nice to know that I can create things that you guys find valuable. You can find a link to that in the description down below. Now, at the end of this video, I'm going to be doing something fun, the first ever community portfolio review. If you're not following me on Instagram already, make sure to do so because I ask my followers there to submit their portfolios so that they can be included in this review at the end of my videos. Going forwards, I'll include fun stuff like this. I also started tracking my investments on there as well, and I'm really excited for you guys to follow along. But before we get to the portfolio review, I just want to reiterate something. I want to make something very clear. Literally the day I post this, the stock market could crash massively. Anything can happen. But I always think to myself, what would 10-year future Steve say? Should I try and wait and time my investments perfectly, or should I just invest? Well, I think he might say, worry not, young Steve, about when you invest, but rather what you invest in. Time for that portfolio review. All right, here's our first ever office hours portfolio review sent in by you, the community. So this was sent in by the British investor on Instagram. First of all, I can see that Tesla there. I see you. All right. But your biggest holding here, the Scottish Investment Trust, this looks really interesting. I checked the performance and it's like a 10x over the past 10 years. That's really impressive. That's all for today. Thanks for sending that in. See you later.